Hey everyone, with the 2019 come and gone, I figured I will cover something related to economics and something that may help you find investment opportunities and such. If being prosperous is one of your goals for the year of 2020. Today, let's discuss about the currency exchange rates among the four major currencies in the world. They are US dollar, euro, the Japanese yen, the British pound, and the Chinese yuan. Let's look at how US dollar exchange rates to the four other major currencies have been evolving over the years. Our discussion today could potentially benefit you if you are, say, in the foreign exchange trading market, or simply want to look for markets to buy to grow your portfolio. As the information that we will discuss today provide the macro information that you need to guide your decision. Now be sure to do your homework though. So I did some analytical work this morning, putting together a picture of the US dollar against the other four major currencies exchange rate and try to anticipate possible trends in 2020. Specifically for each exchange pair, I look at two time trends. First, I look at the implied exchange rate from the M3 money supply and global currency exchange trade weights. The other trend I look at is the actual exchange rate that's observed in the market today. In other words, when you go to the bank to exchange a currency, what's the rate that the bank use to exchange money for you? Take the US dollar to euro exchange rate for example. For the first trend, I look at M3 money supply data for the two currencies. Now I grabbed information from the St. Louis Federal Reserve website. For those of you who are not familiar with the M3 money supply metric, it's the most broad measure of money supply of a given currency exists in the world. It basically accounts for money in circulation, money in bank time deposits, and money in the various funds held by various institutions in the world, slash in the country. Then I look at the percentage of currency trades globally involved in the specific currency in question. Now, higher percentage in this trade metric means higher demand and circulation of this currency in the world. For example, the US dollar accounts for about 45% of global currency trades. The Japanese yen accounts for about 10% of global currency trades. The euro accounts for 15.5% of global currency trades. The British pound accounts for 6% of the global currency trades. And the Chinese yuan accounts for 2% of global currency trades. The currencies money supplies are weighted according to the trade weights. Overall, low M3 money supply and high currency trade percentage importance should be the fundamental driving force of a strong currency exchange rate. Now let me save the glory details behind the data manipulation stuff, but jump right into the result charts. The charts are labeled according to the currency exchange pair. Let's look at the upper left chart for US dollar to pound exchange rates. The blue trend line is the implied exchange rate according to M3 money supply and trade percentage importance. The yellow trend line is what's actually observed in the market. Hypothetically, the two should evolve in sync, meaning that if you see one increase, then the other one should also increase, albeit with some degrees of lags. So if you see divergence between the two trends, then this might indicate a buying opportunity for you. The M3 and trade importance tells me that the US dollar to pound exchange rate should be $1 to 1.5 British pounds right now. But the actual rate observed in the market is $1 to 0.6 British pound. Now, I wouldn't worry too much about the absolute level of the two trends. I would pay more attention to the increasing and decreasing trend between the two. In other words, whether the two trends are evolving in sync. And the reason being, there are obviously other factors that drives the currency exchange rate observed in the market. For example, central government intervention, etc. So that's why I mentioned that you should focus on the trend relativity between the two. We can see that recently the two trends are seen leveling off, hinting that no significant change to the exchange rate should occur in the future. Now, for those of you who are worrying about the decline of the US dollar, well, this is your evidence that the US dollar is not in decline actually, according to the M3 money supply and trade importance. The US dollar should actually be worth more than the British pounds. The story is also identical here with the US to Euro exchange rate. Look at the lower right graph. The two trend lines are leveling off, signaling no drastic changes are to be expected, although we see slight divergence between the two trends in the most recent time, where the market euro to USD rate has seen slight decline, but the M3 trade trend remains steady. What this tells me is that there may be some room for the euro to rise against the US dollar in the short to medium term for the correction. So be on the lookout. Now the story of the day is for the USD to yen and USD to Chinese yuan exchange rate pairs. We see pretty big divergence between the two trends for the two exchange pairs. Take the USD to yen exchange pair. We see that the trend as indicated by the M3 money supply and trade importance has been in decline for a pretty long time now. But the USD to yen market exchange rate has remained stable throughout the time period. What this tells me is that the Japanese government has been stepping up to buying US Treasury debt to manage the strength of the Japanese yen to keep it from rising too much against the US dollar. Indeed, if you look on the US Treasury website, you will see that Japan has become the biggest US Treasury foreign debt holder in the world now. To me, this tells me holding the Japanese yen is a winner for the short to medium term, at least. Now, for the US dollar to Chinese yuan trend, you see that the USD to yuan exchange, according to the M3 money supply and trade importance, is increasing pretty much this whole time, suggesting the USD to yuan exchange rate should keep rising. But in recent times, not only you are not observing this trend, you're actually seeing the USD to yuan exchange rate declining. I would expect the yuan to decline against the US dollar in the short to medium term. But this may also be affected to some extent by the ongoing trade war between the two countries, so it's a bit tricky. I would not play the USD to yuan exchange market as it is very tricky and unpredictable. But intrinsically, we should see the US dollar to yuan exchange rate rising. I hope you like this analysis video. Like and subscribe and let me know your thoughts on the currency trade picture for 2020. Thank you.